and welcome to this special show. It's our Diwali special here, and I have two gentlemen with me who I think together have about 40 years of experience under their belt. So let's welcome them on board. There's Hiren Ved, Pankaj Tibrewal. Folks, happy Diwali to both of you.
Happy Diwali to both of you.
And Nimesh is also here.
Happy Diwali, Pankaj. Happy Diwali, Hiren as well. In fact, Sonia, they both have more than 20 years of experience. I guess we both also have got at least 20 years of experience in the media now. So it'll be a nice thing, talking to the veterans of the market, so to speak. Pankaj has done phenomenally well, so has Hiren as well. Pankaj, you've been managing one particular fund for the last 13 years. The fund size has gone from 50 crores to almost 35,000 crores, right? So, that's the kind of experience he's holding on. Hiren, I've been knowing him for many, many years now. I mean, we'll chat all this, so let's wish them.
I need to, just digest that. 50 crores was the fund size when you started, and it's 35,000 crores today.
Yes.
Wow, that's a massive wealth creation. Okay, you have to tell us, what has your biggest learning been through that journey?
So I think long-term investing is clearly underrated right now, and longevity. And what I have learned in India, what works is, if you can identify right set of promoters, management teams with the right DNA, I think a mediocre business can turn into a gold mine. And our entire effort in trying to pick up stocks is first to identify the right management and promoters. And I think that's something which we have learned, that if you a good business but wrong set of people running it, God save you.
Okay, that's a very, very important thing to learn, especially for the younger generation, right? Where everything is like short format videos and instant gratification and the Instamarts of the world. Long format and longer duration, investing is something that's a virtue, you think?
It's not about a virtue, but I just think if you really want to make big money, there's no shortcut out.
Absolutely.
Right? I mean, I was just looking at some of the stocks that have done well, both as a personal investment, as many of them are quite common even for clients. And I really figured out that the real big money happens if you hold the stock for at least 10 years.
Yeah.
Because that's the kind of time that is required for a stock to mature.
True.
And really that explosive growth to happen, right? Because even in a growth company, it takes time.
Yeah.
And then the markets have to recognize it. And when the growth cycle of a company and a great market cycle coincide is when magic happens.
Yeah. I clearly remember Rakesh once telling us that he was holding CRISIL, for 7 years, the stock didn't give any returns.
Yeah.
And in the 8th year, the stock was actually up 10x. Right?
Yes.
So I'm sure you've been with him. You consider him as a mentor. Anything that has come in your life or in your experience where for good long years the stock has done nothing, but you hold on to it, and actually then it has paid.
Since you mentioned him, I must mention two examples.
Sure.
Okay. He was a very early investor in Bata.
True.
Okay. And I remember me going to his office in Vittal Das Chambers, right? That earlier small office of his. And it was just his room, and then there was the side room which had all the the back office operations people, and just one guy just entered in, and he was just kind of talking and disturbing. So RJ asked, "Kaun hai?" He said, "Nahi, wo बाजू वाला कोई broker से आया है, क्या चाहिए उसको?" बोला वो बाटा का कूपन चाहिए because he held so many shares that he had so many coupons, right? But the lesson was that he held Bata for so many years. Finally, he gave up and he sold. And I remember immediately 2 years after that, we invested. And like within 2.5 years, the stock was up 4x. Right? So sometimes investments really test your patience. Another example of his was, he was also one of the very large shareholders in Apollo Hospitals for many, many years. And it's only in the last 4, 5 years, 7 years, have all the hospital stocks done well. But he was so early in the game, right? So it takes time, and if you buy something and it goes up immediately, consider yourself lucky.
3 or 4 things that one should keep in mind before picking a multi-bagger stock.
So great question, Sonia. I think I have a framework, and The first one is the management and the promoter's DNA, which I talked about. And for us, it's P is not price to earnings. P is promoter plus ethics. And once you can identify that part, a large part of your decision making is solved. And we do a lot of detail study like an investigative agent, to be honest with you.
Sherlock Holmes.
And we call the local CA, we call the local person who is influencer there, talk to about his lifestyle of the promoter and so on and so forth. I think that's very important. The second is the business itself. I think what we have seen is that companies who have been multi-baggers over a period of time, they have grown their sales and profit, but not growth at any cost, along with balance sheet and cash flows. They have kept the balance sheet intact, cash flows have been strong, and that's the growth which has seen longevity. And we have seen 20-25% growth on a consistent basis creates multi-baggers. The third point is that return on capital is extremely important. If out of 100 rupees you invest, you don't generate 15-20 rupees over a period of time, it's better to deposit that money in a bank account and let that 7-8% interest run out. I think over a period of time, multi-baggers tend to be high return on capital. The fourth point is that most of them start small. Small is beautiful. So our assessment has been 70% of those multi-baggers were below market cap of the range between 250 to 400, 500 market cap range. So catch them early, see them grow to mid cap, see them grow to large and giant caps. I think that's the journey. So you have to catch them
young
early,
and watch
catch
them
them
grow.
watch them grow. And last but not the least, valuations. So if you buy anything at an obscene valuation, then you may compound it, but you can't create a multi-bagger out of it. So valuation and the starting point has to be right.
But
so once you follow these 5-6 points, the framework, I think probably you will see them growing over a period, and be patient. As Hiren mentioned, I have seen many companies in my portfolio. We have seen in our fund house that 3 years, the stock has done nothing. 4 years, the stock has done nothing. But 2 years make up for the entire 4 years. But the crux is to be patient in those 4 years, seeing what the company is doing and whether they are doing the right things.
Couple of questions I want to ask both of you all, because you've seen this journey in many of these companies. One, what makes you feel that the journey is getting over and you should exit? And what is that gives you confidence that no, this can be a compounder for the next many years? So, few ingredients if you can share on how you identify those small nuggets which makes you highly convinced.
So I think, I'll dial back a little bit before that, right? I mean, I think he
And
identified...
maybe you can explain with an example as well.
Yeah, and he identified pretty much the same things. You got to be early, your entry valuations have to be reasonable. I coined it in a single line, which says that when opportunity meets execution with good governance, magic happens,
Sure.
right? The opportunity for the business has to be big. The managements have to execute in a very sensible manner with good capital allocation, and they have to be honest and ethical.
Sure.
If you can get this combination right over a period of time, that's when the multi-bagger happens, right? Now the question therefore is that when do you think it's all over, right? Now, again, I think, so let's take an example of Bajaj Finance, which I think at least of my career has been a 125 bagger. Right?
Wow.
So we invested in 2000 and early 2010 when the market cap was 1400 crores.
Okay.
Right? And when we invested, I used to dream, which is the best retail credit franchise in the country? And obviously it was HDFC Bank.
Yeah.
So we said, okay, what does HDFC Bank trade at? It trades at 4 times price to book.
Sure.
I said, अगर मेरा stock ये 2.5 time भी price to book मिल गया तो बहुत मजा आ जाएगा. But when I bought, it was less than 1 time price to book.
Okay.
Right? So entry valuations were very important.
Sure.
And then you don't decide. Who am I to decide whether it will trade at 2.5, 4?
Yeah.
Eventually the market gave it 7 times
7
price to
7
book,
times.
right? So that was the final result.
You're making Pankaj feel very bad, by the way. He exited Bajaj Finance early.
That's one of his regrets.
So that's one of his
Okay,
big regrets.
we all have our
But he
regrets,
still made
right?
20 times. So, and after that, I believe the stock has gone up 100x. So,
So, let's just talk a little bit about both of you as fund managers, right? I mean, we've spoken a lot about your investment style, etc. So, when did you start your journey? And in what year and where were you? You were in
2000.
Calcutta, right?
So my story is a amalgamation of 3 M's.
Okay.
A Marwadi from Kolkata, studied in Manchester Business School, and into mutual fund. For the young, generation and young investors, I think this thing is all about passion.
Yeah.
There's no fixed timing. Unless you are passionate about this field, in the longer term, you won't be successful.
Okay.
And you need to manage your temperament very well. So I think the behavioral side is less spoken in our industry.
Yes.
Yeah.
We all speak about balance sheet, cash flows, but over a period of time, what we have realized is that managing yourself is extremely important. A lot of people who have been successful in investing world, when I look upon them, they are great spiritual guys. And I think that somewhere reflects on your investment philosophy. I don't know, Hiren.
Yeah,
How did
whether
you
you're
start your
spiritual,
journey, by the way?
whether you're spiritual or not, and I agree with you, but I think emotionally stable is very important, right?
Okay, that's interesting. Lot of interesting nuggets, but we have to take a short commercial break. So we're going to do that and be back in just a bit with our Diwali special. Stay tuned. Welcome back. You're watching our Diwali special here on CNBC-TV18, where we're talking to two gentlemen who have so much experience in the markets, but they're also talking to us about their own personal journey. So, it's fun to learn these things. Hiren Ved and Pankaj Tibrewal are sitting with us. Gentlemen, we've spoken about your journey, but two things which are trending right now that I wanted your views on. One is this 70-hour work week, right?
I'm sure all four are working more than 70 hours, right? So
it's not 70 hours together.
no, individually.
That's one. And the other one is that FIRE concept, right? Retiring early,
Yes.
which every young person I speak to wants to retire by 40. So you go first on the
So I think the
70-hour work
buzzword right now in the millennials is that FIRE, right? Financially independent to retire early. I think to me, it's a slightly flimsy concept because you may retire by being financially independent and you may have a phase one of vacations. That's what everybody visualize, right? But after phase one is over, when you enter into phase two, you have an identity crisis. You search out that if you have retired so early, what to do? And your society, perception goes down. And many people then move to phase three of rediscovering themselves again. Or phase two, many people get stuck there. So I think till your mind is alive, Warren Buffett, Charlie Munger has all taught, still at 95, 99, they are at AGM every year, answering questions for 10, 12 hours. You have to learn from them. And if you want to be successful over a period of time, one thing which is close to my heart is there's no substitute for hard work.
What about you, Hiren? Your views?
Yeah, I mean, look, there are various definitions of retiring, right?
One thing before that, do you work 70 hours a week?
More than that.
More than that. I'm telling you, all four
More than
seems
But
to
do
be
you
working more than
believe
70 hours.
that the younger generation should as well, or
I think, see, if you enjoy your work,
Absolutely.
it doesn't really
Doesn't
matter,
matter. True.
right? I mean, I am happy working on a Sunday,
Yeah.
but if on a Monday I feel like not working, it's okay,
Yeah.
right? But there is no such concept that, okay, this is work and then I shut down and then, whatever. I think it's so integral part of what we do. And maybe in our vocation, it's like that it really depends. I mean, there is information, knowledge that is constantly coming through.
absolutely
So
on retirement?
I
you were
decide
saying, yeah.
when I want to engage, when I don't want to engage, but I don't feel the need to say that, okay, now it's all enough. So it's okay. I mean, like all 7 days is good.
Pankaj, Hiren, to both of you all, you've been in the market for 20 years, more than 30 years for you as well. One investor and one management that has really influenced you and changed the way you think or approach your life and markets as well. Both of you all. Maybe you can, Hiren, you can start with.
Many investors actually.
One.
I had, then RJ.
Of course.
I mean, clearly, right? I think
What one thing that really stuck to you for very long, and even you practice even now?
so. I think amongst everything else, there are two things I really learnt and imbibed from him. One was that the ability to assess risk reward,
Right.
very, very important, right? And the second thing, how once you are convinced, you
To write down.
really go overweight,
Right.
right? And I run a PMS strategy which only invests in 10 stocks,
Yeah.
right? And I'm a great votary, and I know in a mutual fund you can't do that, but I'm a great votary of running very concentrated
Concentrated.
positions. To let your winners run hard.
True.
And I always say many times that my smartness was not that I identified Bajaj Finance. I think there are a lot of smart investors who identify good stocks. But that I held it for 13 years continuously
Yeah, and you bet
let
big.
it grow.
Yeah.
To me, that was a difficult decision than having
Identifying
identified and
Bajaj.
bought it in the first place, right?
Any corporate which has influenced you in your investment career or in your personal career?
So there have been a lot, but again, I
Okay,
would go back to one as a philosophy, one company, and one as an individual. So Rajiv Jain from Bajaj Finance,
Okay.
right? I mean, if you see the guy, he's so committed,
Yeah.
even till date. And I'll tell you, I went to meet him 2 years ago, and he had not yet walked into the room, so his EA was there, and I told him, कि, how is it like working? He says, यार वो संडे को 11 से एक रिव्यू मीटिंग के लिए मतलब the
Passion.
passion is something that I was so infectious,
True.
right? And even and not just when it was a young company, even today,
Even
the
today.
same fire, the
Yeah.
same passion is there. The second is the more philosophical one, which is also one of my oldest investment, which is Trent, which has
Okay.
done quite well. It's a stock we've been holding for 15 years now, right? And I remember I used to go and meet the CFO because he was in the same building that we were. And he used to say कि ये जो retail business is like climbing an Everest, right? And he said that we are happy to be a tortoise rather than being a hare. And at that time, the Pantaloon group was really on an adrenaline rush, right? They were opening formats and centers left, right, and center. And I have great respect for Mr. Biani. But just as a corporate strategy, I learned that he said that, we take a lot of time. We will go very slow initially. But once we think we have perfected a format, that's when we will accelerate.
Right.
And you can see that today what they've
Yeah.
done with Zudio.
Absolutely.
They took time. Once they perfected
And they
it,
cracked
they're
it.
just
They've
going
just cracked it.
hammer and tongs.
Okay,
right?
Pankaj, I wanted to spin that question around a little
Ah.
bit. Also, a traditional company which has, influenced you and your decisions, and a management, and some of these new age companies where you see a lot of potential just based on the management.
So I may not be able to name the companies, but on the first individuals, I think Nimesh Bhai of Inam,
Yeah.
I think a combination of spirituality, intellect, longevity, if somebody has to understand. 40 years into the market, still on the pitch, that inspires me, and still on top of his investee companies in terms of numbers. And I visit so many companies across the board. Unanimous respect for that guy from the corporate world.
Yeah.
And they go to, for mentorship out there. Amazing. When I look at one of the corporate leaders, Uday Kotak,
Okay.
no doubt the way he can understand risk, reward, the way he senses from the overall perspective, it's just phenomenal.
But another thing I wanted to ask you about was in terms of, the stocks, not to name any stocks. I mean, if you want,
Yes.
you can, because the ones that you've regretted not buying and the reason behind why you decided that, I should perhaps stay away from this.
Many of them, actually. And to me, error of omission has been the biggest regret of error. Because in error of commission, it's important because 100 becomes 0. So you lose your capital. Where I think the first philosophy of mine is, if you protect the downside, upside will
Take care of
automatically
itself.
come. Protect the downside, right? But in many cases, error of omission has become 50x, 100x. You worked, but because of few rupees here and there, you missed out. Human psychology, when you saw something at 100,
100.
you can't buy at
buy it
150, 200,
True.
and that became
Becomes
10,000.
correct.
So I think
Any examples?
so one of the names which Hiren mentioned,
Yeah.
obviously in the retail company, great ones. We worked very early on, but valuations always look exorbitant. But we couldn't visualize the growth could be so strong, and they can be outliers. So I think error of omission is something which I regret every time.
Okay, so let's do some quick rapid fire before we wrap up the show. And it was really fun. I mean, talking outside markets a little bit about your personal journeys. So let me start with some questions, and then Nimesh can also take it forward. If you had to pick between money and love, what would you pick?
Love. Money will follow.
Hiren, what about you?
Love for money.
That's a nice way to put, right? That's a nice
I
way to
thought you
put.
would say money, because if you have money, then love will follow.
Nah.
We're old school.
Pankaj, to you, because of your 3 M's, Marwadi family, mutual fund, today if I have to ask you if you want to stay in Mumbai or Manhattan, which will be your pick?
Amchi Mumbai.
Mumbai. Hiren, for you, I'll ask you something different. Between, say, wine and spirit, what would be your preference?
I drink both.
No, but I wanted to ask you more from a stock perspective, because now we have a listed
Spirit, actually,
Spirit.
it's my
top
it's one of my top
holdings as
holdings
well.
right now.
Okay, if you had to live a long life but poor, but die early, but die rich, what would you pick?
He's already rich.
Happy. Die happy.
I just have one question for both of you in terms of, we have a lot of the younger generation that's
Yes.
getting into the market. And if you've realized, the younger generation is a largely confused lot about a lot of things.
Yeah.
About money, about love, about career. If you had to give them one piece of advice, what would it be? Let me start with you.
So I think learn to delay gratification.
Then and yours?
So 3 things. Don't think short term. Think long term and sustainable. Second, as Hiren mentioned, we all have grown up by knowing income minus expenditure equals to saving. But over a period of time, income minus saving should be your expenditure. Save early, understand the power of compounding, and trust me, you guys will all be riding at the golden age of India. 10-15 years, friends, if you are not invested sustainably, you will miss out the bigger picture which we saw in the 80s in the US, Japan, China's in the 90s and 2000. That phase is there for us today. And all these 22 to 25, they have a long runway to grow. And if you ask Warren Buffett today, which is the biggest thing, he says, I was lucky I was born in America.
Yeah.
Maybe 20 years later, when you ask a millennial,
Yeah.
he will say that I was lucky,
Lucky
I was
that I'm born in India. Yeah, absolutely.
So I hope that my son, and I'm sure all of you hope the same, I hope that my kids grow up and say, we were lucky that we were born in India, and to our parents, because they were sensible enough to invest early in the market. Gentlemen, it was a pleasure speaking to you. Thank you so
Thank
much,
you
and
so
hope
much.
both
Thank
of
you,
you,
Hiren. Thank you, Pankaj.
hope
Thank
both
you.
of you, your families have a great Diwali, and hope we meet next year and we are even more prosperous than we are today.
Thank you.
Thank you.
Wish you and all your viewers a very, very happy Diwali and a happy summer.